Well, good morning, everybody, and welcome to the TriggerCharts pre-market rundown for September 27, 2019. This is Andrew Horowitz, and I'm going to go through some of this. I'm one of the founders of TriggerCharts, and so glad that you can join me today. Hopefully, everybody is up and awake, ready to go, ready to start your trading day to make some money. We're going to go through some really, I think, key factors in what's going on right now within the markets and making understanding exactly how we can use some of these trending moves, indicators, and market profiles to really figure out what's happening. One of the things I want to go over today in particular, for those of you that are new to us, is a recent update, a pretty exciting update, an update to our core Commander series that allows for you now to alert any time frame, single stock, group of stocks, or your entire radar screen. You can have alerts blinking on and off throughout the day, specifically set by you. So we're going to go through that in a second, but I thought what we'd first do is start with the very important disclaimer, the double important disclaimer, in other words. So you know, and you have to be understanding of this, that I need to tell you that investing involves substantial risk. Past performance is not a guarantee of future results. This is for educational purposes only. Use your best judgment when you're investing, and please do yourself a favor. Do the research. Just don't act on any signals that just appear out of nowhere. You can also chat to me back in the chat session here. I'll put a little word that says here, right here. How about everybody says a quick hello, if you're making sure the pulse of everybody is, everybody's alive and well this morning, and that you can hear me, see my screen, and then we'll make a run at this moving forward. I also want to make a note that I did put in the link to the Commander series on the TriggerCharts, on the trading app store for TradeStation. So do me a favor. Can you see that little area that's a chat? Just somebody tell me if they can hear me. Otherwise, I'm talking to air, and maybe that's why nobody's responding. Okay, that's one. Okay. Good. All right. Great. Here we go. Strap in, because we move fast on this half-hour show that we do each and every Friday. And make sure to tell your friends, by the way, of this, because we are the #1 highest-rated app in the trading app store for indicators overall. Well, what's going on this week? I mean, I guess the best thing we can say is you can't keep a good market down. The market's had every reason to sell off pretty significantly. Even though last week finished with a down market, this week we're still seeing a little bit of down move, down about 0.5% on major exchanges. But generally speaking, every single time there is an opportunity to see a sell-off breakdown, we're seeing a good amount of holding. One of the reasons for that is, and you look at your chart on the right, this is a daily chart. We see that there is this level right here that is significant support for the markets, because what we do is we just simply look from the right to the left, and you can draw a line right across. Look at that line, carry it from right to left, and you can see that there is a significant amount of support from about 296 down to about 296.50 to about 296.24, where it continues to bounce from. Right now it looks like we are seeing that the futures are up. The YMs, or the Dow Jones Minis, are up 54 right now. The SPOOs, or the S&P 500 futures, are up 8, and the NASDAQ's up about 17. Gold is getting slammed this morning. Oil is getting slammed this morning on some news that maybe there will be some kind of opportunity for Iran sanctions to be lifted by the U.S. As a matter of fact, there was a commentary from Iran, if we can believe this, underlined, italics, and bolded, that Iran said this morning that if, in fact, we enter into some talks with them, the U.S. may be looking to release all sanctions, and oil is pushing down on that. Consumer confidence recently falls dramatically. We had one of the greatest moves on the downside for consumer confidence last month, and we probably, I guess it was about the last 9 months, we haven't seen levels and a fall percentage-wise or point-wise this much in the recent consumer confidence number that we saw on Tuesday. Probably that has to do with some of the fallover of what's happening with tariffs and the market move last week. As you know, if you have been paying attention, there's political landmines everywhere. We call it tape bombs or headline bombs. Basically, you go through the day and everything is working swimmingly in your direction, and all of a sudden somebody decides that they're going to just share some information or a leaked memo or some other tweet, and it just takes down the markets. Yesterday, there was some discussion because of this impeachment and things weren't looking good. And then the South Chinese Morning Post came out and they said, you know what, we think that we are going to start working with the U.S. because they've been dealing fairly. And then we saw after the close that October 10th is the new date for trade talks to begin. An actual meeting was set with the U.S. and China. And it's a real problem because you can get faked out a lot and you really have to pay attention to the trend very significantly. And we are at the end of the month. Monday marks the end of September, the last trading day of September. So what you see a lot of times in that kind of environment is a market that does some window dressing, especially we're at the end of the quarter, we're at the end of the month, and basically mutual funds, institutional investors look to rotate their portfolio into what they want their shareholders to see and rotate out of other things that really maybe haven't done well, so that when they look at the report, the quarterly report that comes out, they say, okay, well, at least they didn't have that in the portfolio, so that's not the reason that they did poorly or did well, whatever it is. GDP on the second quarter, the final read, came in at 2%. We saw that. So compared to last year where we were at about 3% or so, we're definitely slowing down significantly. The question is, are we going to start moving even slower right now? If we look at the ISM manufacturing numbers, if we look at some of the factory orders and some of the productivity orders, probably we're going to see that GDP will be slowing a bit towards the 1.6, 1.8% for the third quarter of 2019. It doesn't show right now at all that we were in a recessionary period, but again, we have to wait and see. Even though the 210s on the treasuries did in fact invert for some time, we're not quite sure if that's due to some of the market influences such as negative rates and negative interest rates on sovereign debt, pushing a lot of people to buy U.S. debt on the short end of the curve, or if it's something else. I'll mention also we just did a TradeStation AppStore showcase yesterday. We did the Commander Series version 12 update. That should be available probably today, if not at the latest on Monday. It's been actually put up to TradeStation for review. They make sure that the code is good, and then it will be released. For those of you that are, in fact, subscribers or even trial users of the Commander Series, well, you'll have the opportunity to get that upgrade very simply by going to your trading apps. So you can go, like, for example, if you're on 10, you go to the Trading App Store updates right there, and you click that, and you find out if there's any updates, and you'll get the launching ability of that number 12 update when it comes. Quick chart to show you here. This is kind of where we are in GDP. And if you notice this, we're pretty much, flat-lined. Went up a little bit towards the 2017 time frame. Dipped a little bit in 2018, but kind of on that trail. Basically, we just draw a little bit of a chart here. We're seeing that there is kind of a question as to a break point right now with a simple triangle charting mechanism there. And basically what that does is going to give us some idea where the next zone is going to be down, and we can start moving lower right here into the sub-zero territory, or where we go on the breakout. It would seem to me that the trend right now is a little bit slower, so we'll have to keep that in consideration. All right, where are we otherwise? Let's see. Well, we know that we saw the all-time highs rejected. If you look on the chart on the top here, you can see that we had those all-time highs that we hit back in the mid part of July, starting to really come off and rejected again. This is what happened last time. Right now we're starting to roll over as well. So when we look at this kind of rolling process that we saw, the question is it going to be one that happens very quickly, or one that kind of wiggles and moves around and then we come down, or kind of continue up to the high point? The big issue right now, and the whole notion of what's happening, is the idea that we have to see some kind of a deal with China really take place. It doesn't look like China really wants to do a significant deal. They're really happy waiting it out for some time. Trump administration needs to do a deal of some kind, at least in some kind of a foundation of a deal before the election, because that would really help. And right now we kind of see a bit of a stalemate, so I don't really think anything's happening there. Rates help, or in this case, HEP. Rates help to move and propel the housing market last week. We saw the initial claims remain low. That's really good for the employment report, which is coming out at the end of the week next Friday. Industrial production picks up in August. That was good also. Really, market needs to hold 3,000 points on the S&P 500, which is falling a little bit below at this point. And that's a major issue for the markets. I think that psychological mode of, hey, where are we and what in fact is that level that we need to get past. Clearly 3,000 is a number that needed to hold that wasn't able to be done. So where we are right now is in a question mark of where do we go? Do we drop down? And there are some levels of holes here, and I'll mention that when you look below this area, there are some questions down to about 292, and you see that there's a very wide area that we have in this particular altimeter. And the problem with that is that there's a lot of volatility that will be in there. There's not a lot of execution that has been considered very much within anything other than the weak holders. You get a lot of volatility in those areas, meaning there's not a lot of volume. And when there's not a lot of volume in those areas, the concern we have is that we could see a flush quickly through time. Those are things that we look for. And of course, if you're on the right side of the market, well, you're in great shape. Market's really got to hold approximately this, I would say, 296 level to make sure that we don't see a flush down lower to the 292 level. And so right about here in this range, down to about here. And again, I'm just simply using the altimeter, which is a simple drawing of 3 lines, part of the Commander series that we have. And we talk about this a lot. And by the way, why do we focus on the Commander series, not some of the other indicators that we have, even though we pull in Aileron quite often? The reason is that's what I use all the time to make trading decisions. That's what I actually use to figure out on short-term, long-term swing, day trades, what we're going to be utilizing for positioning and for entry positions, entry prices. So that's why we really focus on this, because this is what's really being used in the field on a regular basis. Yes, the KRI, the key reversal indicator, which you can see from here, which is showing, let's make this a little bit bigger for everybody, showing a little bit markets that are near equilibrium, showing a -2 on the bottom here. But at the same time, we are seeing a little bit of an oversold level. That's important to notice. That's why we're getting some of these bounces. People are thinking that, and there's a psychology that we crafted inside of this particular indicator to show us, hey, are we in almost a fear or a euphoric type of environment? And right now we're in a little bit of concern. I wouldn't call it fear. I wouldn't call it absolute just, angst. Right now, there's just a real question of where the next direction is. So when we get back here, kind of talk about a few things. Next week, we have the ISM services, factory orders, and employment report that will be coming out. We saw some movers this week: BYND, Peloton, Smile Direct, ROKU, also had Micron reporting. So let's take a look at those. Also, do me a favor, please put in your symbols. We'll do a quick analysis of your symbols. Just type your symbols where I put the word symbols right there. I'll give you that direction also. You can see that at the Commander series, there is a 10-day free trial for all of our indicators. Well, let's take a look right here. Some of these that you look at right here, like BYND, Peloton, SDC, ROKU, so they have this little E here. Not enough data. They either just came out, they have very short trading history. We could see it on the chart, but on a multi-time frame, it's not showing up. But let's focus in on a few things. Let's get back to the SPY. One of the things we did with our indicator, this is version 12. It is much faster. Look how fast this reacts. I mean, this is all of our chart, all the calculations are done in real time, and what we're seeing is a real good optimization of this particular indicator. This is, in fact, what you're looking at, the actual Commander series indicator. Basically on the top, what we're seeing is that we have on a trade bias here, you can kind of look at the top, show you, there's a 30, a 60, a 240 minute, a daily, and a weekly all across. And what you could do with this is you could find out where, in fact, there are those trends that are either changing or starting to build. So we can see there's long alerts here, for example, on the ES on the 30-minute. Okay, so we can see that right here, right at the end here, and we're seeing that there is, in fact, a level right here. That's not a good one. Let's go with the spotlight. Right here, we're seeing a little bit of a long alert bouncing off. But look how well we held on the 30-minute over the last day or so. Once we got that level of support drawn, it came down into support and then started moving up a little bit right afterwards. And right now, like I said, up slightly this morning, about 8 points or so. We go out a little bit further. When we look to the chart to the right, and you could do any mix or match of charts that you want here, we're a little bit in what I would call a consolidation zone. We have gray on the chart. And gray on the chart shows us that there is, in fact, a consolidation. It's a no entry position. One of the things that we did, I really want to share with you on this right now, is I'm going to open up the properties. I'm going to highlight just this ES. This is the line I'm going to highlight. I clicked in any box underneath the TriggerCharts Autopilot MTF multiple time frame, and I'm going to go right here. And what I'm going to do is I'm going to look at the new inputs you have. New inputs we have, for example, alert on 1. That references time frame 1. Time frame 1 is trade bias one right here, this column. Time frame 2, this column up here. Time frame 3, column on the top. Time frame 4, etc., etc. So whatever time frame you put in, we're looking at that. The minimum is 30 minutes, so the 30 minutes isn't automatic. But let's say we want to keep this as it is right now, okay? And we want to turn the alert on. I'm going to take the alert on, and I'm going to say alert continuously, and we're going to say it's going to go with the global messages, the global messaging preferences, which we did, is a beep and 15-second window. And I would think that if we're in a short alert, we should get a pop here. There we go. Let me move this over for you. It won't let me move it over. Oh, come on. There we go. There it is. So there's the alert that just popped up, and it shows you, and I'll just reset that alert. You just right-click and say disable alert, and I'm going to right-click on it. I'm going to say alert, enable alert continuously. It shows you ES, shows you the price it alerted, shows you the autopilot, showed a long alert on the 30. If you click here from anywhere you are, it will take you back to this particular window. So we know we see a long alert on the 30-minute on here, and now that's set. It will continually alert when there's a change in the alert sequence. Now that's alerting all of them. If I only wanted to alert, for example, the 30-minute, what I would do is I would go into all the other ones, and I would just type false. I would go into these and just type false. So, for example, I'm going to take this and take false here. I'm going to take the alert one on that we know that just hit. I'm going to take it off. So I'm going to put it on. You see when I did that, because I reinstated the alert, it didn't alert me this time. So if I was to put it on for all symbols, I could easily click the top, right-click, and I could say studies, edit studies for all symbols, and I can put whatever I wanted in there. And some of these are blank because that tells me, by the way, a little quick trick here, that tells me that there's some of the alerts or some of the indicator inputs on the radar screen already that are different from the base. So you can click this again if I want to put all of them on. I say true. I would say true here, and this would overwrite and make all of them now true. So you can mix and match. I'm going to cancel this. You can mix and match and put whatever you want on a particular stock, like I just showed you by double-clicking very easily. Or you can highlight the entire range, right-click, studies, edit the studies for all symbols, and then what you would do is you would turn the alerts on here, okay? So you would easily just turn on alerts, alert, right there, alert continuously. Alert continuously is the best way to do this. We've programmed inside of the system to make sure it only will alert when, in fact, you're seeing a change from, let's say, a long to a short alert, or a short alert maybe to from a short that goes away, like a blank area, or a long profit, back to only long alerts and short alerts are going to actually alert. So it made it really easy that each bar is going to re-alert, though, if it does come back and it is a short alert that went away and came back. So every bar refreshes. So the 30-minute bar will refresh after 30 minutes if, in fact, the long alert did not confirm. Otherwise, it would turn into a long. It will turn green. And the only thing, again, that's alerting, I want to make sure this is clear, is long alerts and short alerts. This is in order to keep you updated and understanding what's happening with the trend and what's making sure that you enter trades and find trades that are good for you, that meet your criteria. So what you can do is put a load of stocks in here, load of symbols, whatever it is. It could be futures, or it could be currencies. It could be stocks, ETFs, whatever it is. And you could actually then choose. The other thing that you could do is you could choose, oh, I just want to do these stocks, these particular names. You know, you could, depending on where you want to do it here. You can say right-click studies. You can edit all studies. If you're inside of this, so you can edit all studies, which is not seemingly coming up for some reason. That's good. There we go. Actually, that's not working right. Where'd I go? Oh, here we go. I don't know why it's not. That's not working very well for me today. I don't know why. Anyway, you can, in fact, look at a group and work on a group as well. Let's see if I can do it like this. Studies. I don't know why this is doing this. It's kind of weird. Doesn't show the study on there. I don't really understand why that is on this. But anyway, you could do one-offs. You could do the whole one. You could figure out what you want to do. It's very easy to use. Now, this came from, by the way, your suggestions. You had asked us about this. Let's go through some of the stocks now, though, and we'll kind of put out we're putting out a tutorial on this. You may see a little bit of different functionality with version 10 and version 9.5, but basically it works the same. There may be some areas that you need to click. So don't, okay. So from here, trade buys here. Here. We'll show you how to do this. I don't know. Kevin knows how to do it. Kevin will show us. He says you don't highlight the M30 in intervals, just highlight the one row of trade bias. Oh, okay, I got you. So just this one here. You can do it for that grouping right there. There you go. I knew it was something like that. Thanks for the help. I build it. Kevin tests it. He runs it. He makes sure it works. He gives me all the information. So basically just highlight one of the rows, you know, this, like these stocks or maybe these stocks here, right? Studies, customize it. And then you can put on and off whatever you want for those particular stocks. Makes it really easy. Thank you, Kevin. Always got my back. All right, let's take a look at some of the stocks that are going on right now. Let's look at gold. Gold's down a little bit, dropping pretty substantially here on the day. And you see that big drop here, that yellow bar. Kind of interesting on the 30-minute. We're starting to break down. Here's something you need to be aware of on the daily level of gold here, right? Let's take a look at this. It's pretty important. And let's use some of the tools that are available to us within TradeStation. Again, line in the sand, serious support right there. Where do we go from here? Well, when you look at this, we take a box tool and we simply say, well, we got this range down to about 1440. The opportunity for a short is pretty significant here. There really is nothing when we look left. Looking from right to left, it looks like there is the opportunity for gold to really kerplunk very substantially. And we're seeing that blow off and fall down that is breaking through the 1498 down to 1494. When we look at this particular level here and we highlight over this, right now my stall or the major support right here is at 1499.50. We're well below that right now. There could be the opportunity for it, markets to try to hold down to about the 1490 area, right about there, the lows that we saw. But below that, watch out below. There is a real short opportunity right here. And you can see we're seeing short alert on the 30 on the top here, right? We're seeing this. So let's kind of look at this. We're looking at on the top. On the gold, we're seeing short alert. We're seeing on the 60 a short alert. We're seeing a 12-bar short here on the 240. We're seeing a short alert on the daily. What that's telling me is whether I look from right to left or left to right, that there is a major opportunity for this to really break down very significantly, and the trend is clearly there, that we're seeing the short time frames move consistently into the longer time frames with the same signal. And that's really important. So then we got gold. Then we got silver. So what's silver looking like? It looks exactly the same. There's a lot more support on the daily on silver, though. This is something that we really need to notice. Okay, we need to notice and take a look at the fact that when we look at the daily area and we draw a box, well, we can see, wow, there's a lot of support right underneath that. So when you look in this whole range, yes, it may look like a stair step all the way down, and there may be better opportunities in between some of these. But generally speaking, when we look at this, is not the same chart as we saw for gold. Going back to gold, just to look at this, look at this. This chart is very clear, right? There is a really seriously big hole in this particular chart. I would watch gold. I think that's kind of an interesting thing to take a look at. All right, what else do we got here? I want to go down to some of these areas here. MU down 5% today, trading right now at 46, we'll call it 46.15, I guess. So let's draw a line at 46.15, and what do we got right about there? Looks like it's no man's land or no person's land right here, and what you have to look at here is that probably just trying to really focus on the daily chart for a second here. I would see that this downside clearly down to 45.77 if there's no reprieve, or possibly they'll try to pull it up to 46.91. But either way, again, when I kind of look to my left in this whole environment, and I see that there's really not a lot looking left here. There's one island in between this. Not something that I would really want to trade very regularly. Not something that I think is that will look like for the long side that I would really be very convinced of doing. Peloton came out yesterday. I mentioned that. I want to look at BYND for a second here if I can find this on this. There's not much on this BYND. Right now trading at 151, so a nice spike yesterday. But look at this. Look on the daily chart. We're just starting to form some of these altimeters. Stop dead on its altimeter. Now, Autopilot doesn't have enough data right now on this stock to really format it. We need at least 200 days of, or 200 bars of information to really format this correctly. But look at this bar. We came right on the top side, and it looks like it's going to be rejected. Probably about 160 was the high there. So where are we trading now? 151. 151. Wow, it's back below again. So yeah, this was up nicely, but I'm not really impressed with this particular trend here. And again, it's a little bit new, not easy to find this information on this. ROKU fell down. Look at that. Now here's a great lesson, and I'm gonna pull this up a little bit bigger here because I want to show you something. Once again, we're seeing. Let me show you what I'm seeing here. Okay, so I'm seeing a major consolidation. I'll even draw that a little bit bigger. I'm going to write over that a bit. There's a big consolidation through time. This consolidation through time is very significant, and we can see that over time really couldn't get above this level, couldn't really get too much below this level. From 90 to 110, there was this major consolidation from about the end of May through the mid part of August. Very significant, and there's a lot going on there. Then we saw something happen. Then we saw that what we usually see and what we look for on a regular basis is when you see the springboard, when you see that move outside of a consolidation and it moves in a direction, it's usually very fierce. You have a compression, a spring, if you will, that's tightly wound, that what happens is that they actually move very significantly into the direction that the trend has and the breakout has. And what we saw here was that the breakout was the upside and it continued on, and the continuation pattern really held. Now, what happened from there? Well, we saw the continuation of this till we had a new altimeter that was drawn and a recommendation to get out with that orange. See that orange bar right there? Okay, now let's clear this up. What happens next? Well, if it starts to come down, we have to realize and understand that, well, that is, first of all, not in a long position. That was taken out up here. Then we look at, there's a really interesting level here. Autopilot calls a short at 156 on the daily. And from there, we notice that there's a little bit of consolidation. But again, looking even further down to here, not much. So right now, where are we? Well, let's just simply draw a line. I mean, seriously, it's as easy as drawing lines. Let's draw a line to where that major support was, right in that range right there. 97.62. Well, if we kind of zoom into this a little bit, look how close we came to that level right here. And it's starting to bounce off. Now, there is a good amount of, I say, support at this region. Below this, honestly, we have to look at this going down to probably this level, which is right about the 84 and a half level on this. But bottom line is ROKU's looking pretty weak right now, and that's a problem. One stock that we asked for by one of our peeps here, MDR, McDermott. McDermott looks like there is a potential for bankruptcy. That's the news. They're in a restructuring process, talking to outside into this. There is nice support on here. If you want to take a stab at this at 193, interesting. You have the opportunity to see the potential for a move if it gets above the 292 up to about $4. Wide range here. You're going to see consolidation and probably bouncing back and forth to this resolution of all this. I want to mention again that you can get a 10-day free trial of all of our indicators by simply going to the link that we just set up. And bottom line is that I think that you'll really enjoy this. It will really enhance your trading, especially with the ability to utilize these alerts right now that are based on individual positions or they're based on the overall. Did you do Lily? No, I did not do Lily. Let's do it real quick. LLY, enter. Well, that's not working. LLY, enter. There we go. Again, I'm looking on a daily chart. It looks like it has good support about 111 and change. It looks like there's a little bit of a potential for a drop zone in here. This is an area that would really be concerning to me. I'll kind of draw it out for you right here. If Lily kind of gets, in this area, I can see a flush down to 108, but that's really not much on a dollar sense. I think you're in a big consolidation here. Let's stretch this out a little bit. Market's now open. Okay, thank you. Let's kind of stretch this out a little bit. I mean, this chart looks like it's consolidating down below. If you were to ask me which side would I say that it's probably going to go on, I would say that right now, if you don't hold support, you can see a new drop probably down to the level about 108. That's the level that I think is really important to hold here. So I want to thank you for joining me today, and we'll have this up on the recordings on the TriggerCharts YouTube channel as well as the TriggerCharts website, TriggerCharts.com. Thanks so much for joining me, and I'll see you again next week.